Today will be another trade review. Unfortunately, not the same result as yesterday's trade review. Today was a losing trade, but still somewhat happy with the way I traded. I executed on what I saw. Now, of course, after the trade, and we'll discuss what I'm about to talk about here. After the trade finished and it was a losing trade, I did kind of see my mistake with a much clearer mind. It's always tough to really see, to really focus on what you could be doing while you're actually in the trade. So I'm overall pretty glad with the outcome of this trade today, even though it was a losing trade. I feel like I learned a pretty valuable lesson, and also in general got some good data for future references. So as you can see here, it was a buying trade. We'll start off on the daily here. Now, the main mistake I made today was not sticking to the bearish bias. I think I discussed yesterday that I'm overall fairly bearish on S&P, and here we'll just focus on S&P for now. On S&P here, so sorry, there we go. So yeah, like I mentioned yesterday, relative equal lows here. Now we did have the formation of this fair value gap here. As you can see, there's a lot of noise in there, but we do have this daily fair value gap here. Let me just delete this quickly. Boom. So we do have this fair value gap here. I was anticipating more of an upwards push in the fair value gap. I feel like we didn't necessarily get all that much push upwards, but considering the bearish bias, we'll probably see I mean, tomorrow is CPI, so it kind of makes sense to have a not necessarily as bulky of a daily candle here. Now it is still 1:31 p.m. Like the day isn't over yet, but I'm anticipating price to close somewhat close to here, maybe a little bit bullish, maybe a little bit bearish, but I'm not really anticipating too much of a bulky candle. I was tempted to buy just because I was just because of here on the hourly. We did have these levels here which were within the fair value gap, and like you'll see this here, it's a little bit clearer. This is our daily fair value gap here. We did also have another fair value gap right here, which I anticipated price drawing into, considering the price action we saw here. Now, this is where my mistake was, because I saw the 8 a.m. candle here. I saw SMT put in between ES and NQ. So if we go right here, there was an SMT here, and I know you see two of them there. We'll talk about that lower. It's in the lower time frame. But yeah, from this SMT, like, to a certain degree, I do want to anticipate bearishness. That's kind of the point of SMT with the divergence. We did have a liquidity sweep here on ES of the most recent swing high prior to the new week opening gap, the start of the new week. So that is something I definitely should have kept in mind in terms of maintaining that bearish bias. That should have really solidified my bias here with the liquidity sweep and the SMT with the liquidity sweep. So we kind of have like a double. SMD here. So I think just stirring away from the higher time frame was my main error today, and that's something I'll have to keep in mind for future references. Something that I've made mistakes in the past with too, so something I'm working on here. Now, to go down here into let's go down to the 15-minute. You could see in relation to the 12 a.m. open, if we're looking at it from a bearish bias and from a bullish bias, selling and buying kind of made sense. We had manipulation in relation to the new day opening gap. We had all these overnight lows taken, and also from a bullish perspective, we did have this 1 hour breaker here. So from this 1 hour breaker, which is also visible here and actually rejecting quite nicely now on NQ, and also rejecting absolutely perfectly on S&P. Yes. I was anticipating with this push away from the breaker to at least go into this fair value gap and potentially push above these highs. Not necessarily today, but that's kind of what I was looking for. Yeah, so yeah, like you could see that here. There was a lot of clustered price action here. I was looking for a raid on there, and in general, just the fair value gap here. So that's kind of why I took the buy here. When we're trading new day opening gaps and pushes into new day opening gaps, we know that for the most part it kind of acts as like a support and resistance in certain price levels. So that was kind of what I was relying on. Now if wow, this is really skyrocketing here. Now if I go down to the 5-minute now, you'll see a little bit more of the SMT that was being put in. See, we had multiple smart money divergences in price, and I think this also may have confused my bias a bit, and also with so many SMDs, I kind of anticipated a lot of choppiness, which is really what we saw. We saw so much choppiness. I was just on the bad side of it as my trade lost. Now, I really should have just stuck to that initial bearish bias, and you'll see why here. As we had the 945 rolled around and the 950 macro rolled around, there was a displacement here below swing low. We had our displacement, and we had a short right here, a swing high here, and 1-to-1 here, which ultimately would have hit, but as price kept dropping lower below the 12 a.m. open into the new day opening gap, and with the start of a new hour, I kind of anticipated a complete reversal, and I'm not sure why. Looking back at it now, I'm not necessarily upset I took this trade, but I just want to focus a bit more on being more focused on the higher time frame in the future, which is usually what I really am good at doing. So due to that, I focused a little bit too much on the lower time frame. Saw this as a break in structure here. We had the breaker here, push above the breaker. Now, let me just delete this quickly. It's very noisy. So this position was no longer there. Delete. And then as price started moving downwards, as we got the break above here, I had a position. Oops. I had a position originally placed here, as you can see, in this fair value gap right below the 50% level, which would have hit, but then as price started moving upwards, I adjusted my trade to meet the 50% level, since it still meets our targets above this high. Our take profit still meets those targets. And the main reason I was comfortable moving my trade higher in price was because of this balanced price range. So I told myself, hey, price is going to break below this balanced price range, we will probably see a even further push down, which is what we got. So I put my new entry point there, and as you could see, the trade did not play out in my favor. We got tagged in around 1022 and stopped out around 1040. So yeah, this was a losing trade today. One thing I like to notice is it is a day before CPI. Its PPI was a heavy news day today, and you could see at 8:30 we had quite a volatile spike here, which is when the news came out. So I was also anticipating a reversal based on this news. Now, days after CPI, usually not the highest probability trading days, and that's been noted down in my folder now, my Excel data sheet where I track all my trades. So yeah, in general, am I upset with this trade? No, because from a entry standpoint and from a trade execution standpoint, I feel like I executed very well. I didn't really jump the gun. I stuck to my entry model, which is wait for displacement, wait for fair value gap, enter only if the fair value gap is in a discount if you're buying, if it's in a premium if you're selling, which is the case here. We entered right here in this fair value gap. And yeah, I mean, like my trade was almost about to hit 0.8 out of 1. I always wait for 1. I either let my trade go to win or loss. I don't really take profit. I don't really take partials with a 1-to-1 strategy. So yeah, I think in general I should have definitely stuck to my overall bearishness. It's the trade that had the most confluence. Looking back, I think the bullish bias I came up with was not as strong as the bearish bias for sure. I think here with all the downside movement, we should have definitely stuck to looking for sells. Also considering with this range, as you can see here, with the range we have here, which is the range since the beginning of the week, we were very much so in a premium, which we're looking to sell in premium, buying discount. So it's another thing to keep note. But yeah, I'm still glad I took this trade, because I think considering it's been a month since I'm trading, this is a good learning lesson to really go strong over the next few months in terms of trading, and really just trying to pick the best pick the best trades out there, and really wait and be patient, and take this as a learning opportunity to be more patient, and also trust your initial bias. You really just want to trust your higher time frame bias the most, even when the lower time frame may hint at something else happening. So yeah, overall, main issue today, internal model, external model, and matching both of them. So thank you for watching this YouTube video, and I'll see you next time.